My investment thesis is that the best opportunities to make money in the stock market lie where other investors won't look. In other words, look for companies that are undervalued because of temporary pain. Look for the companies that are temporarily out of favor, but that will likely work in the future. Even in today's market, there are many sectors that have not recovered from the March low, but they will. And historically, it has been a good idea to buy companies at low valuations. So, let's take a look. So, if you're LKZ and you wonder what would be a good example of something that is hated but that will still work in the future, well, one of our basic needs is housing. Some will disagree, but people typically need shelter. And today, apartment REITs are once again discounted to some extreme levels. Right now, the sentiment has turned negative because some rents have gone unpaid, vacancy rates are slightly rising, and there's the fear of an urban exodus. But the only thing that could justify today's discounted valuations is a permanent loss in cash flow and loss of future growth. In my opinion, the pain for apartment REITs is short term and will subside over time. High quality apartment REITs are expected to suffer mid to high single digit negative cash flow and growth into 2021. But some apartment REITs are offered at 30% discounts or greater. Growth will return. Balance sheets are still relatively strong. Liquidity is significant, and interest rates are near zero. In time, apartment REITs will turn from defense to offense with new acquisitions, property developments, and even share buybacks, and the pain will be forgotten. Although some companies may not make it through the current economic conditions, real estate has a good history of recovering. And although it may not be time to start buying apartment REITs, now is the time to make some plans. So let's take a look at a few opportunities that may be coming up. And today we're going to take a look at 4 different REITs, beginning here with Equity Residential. We're going to be looking at the 20-year monthly chart on all of these. And for disclosure purposes, I do not hold any shares of any of these REITs. Equity Residential, the symbol is EQR. As you can see here, the top of the cycle, and hopefully we're nearing the bottom of the cycle. And you can go back in time and take a look at the other cycles. Back here in 2009 was the bottom there, and we do have a relatively decent upward trend since then. So if we are at the bottom of the cycle here, that's a good sign. Into volume, not going to tell us much. Here into the MAC, you can see that the fast line is at a negative 4.295. It's pretty low, but it looks like it's just barely starting to turn, perhaps the beginning of a bottoming process. Now, going back in time, you can see these other bottoming processes. There, and then in 2009, and I don't think that this bottom process is going to be all that much different. Here in the histogram, you can see the same thing. Also, price rate of change. You see the bottoming process starting to occur with a few sawtooths down here. Into the relative strength, this one looks nice. It looks like the bottom is in and it wants to head on up. Into stochastics, still starting that turn. And then Williams shows perhaps a bottom in at that point there. So relatively easy to see. Watch this as it evolves because this might be an opportunity. Let's go to the next chart. And now we're looking at Avalon Bay Communities. The symbol is AVB. Now the yield on Avalon is 3.96, and I failed to mention that the yield on Equity Residential is 4.33%. So reasonable returns. Again, this chart's going to look very similar. Nice upward trend, bottoming process. Moving down, same thing in the MAC, just barely turning on the fast line, but it looks like it is begun. Same thing here in the histogram. Price rate of change, very similar. Relative strength also. Stochastics, and then the Williams. All of these oscillators are showing good progress. So once you see a number of companies, in this case, a number of REITs with very similar patterns in both the price chart as well as the oscillators, you know you have something. Let's go to the next stock. Looking at Essex Property Trust, same thing. Bottom in 2009, nice upward trend. Much the same in the MAC. Now, not quite turning yet, but I would imagine it's not going to take too much longer, perhaps a few months or so. Histogram very deep on that. Price rate of change, very beginning of a bottom process perhaps, into the RSI, much more evolved in there, into the stochastics, looks good, and then the Williams also looks nice. Very similar price chart and pattern. All right, one more chart. And the last chart here is Apartment Investment and Management Company, and the symbol is AIV, and the yield on AIV is 4.49%, and the yield on Essex was 3.89%. So once again, similar price chart and similar oscillators. Now, this oscillator here, the MAC, is not as deep as Essex was. You'll find some differences, but for the most part, you're going to see a lot of these oscillators looking very similar. Price rate of change looks good. Relative strength, nice, very evolved, looks like it wants to run. And then stochastics and the Williams, also very evolved, wants to run. Back up to the price chart. Again, you don't have to start buying immediately. This is just something for you to consider. I'm definitely going to consider these toward the end of this year into early 2021. And for today, that's ChewDog Charts. Thank you.